do. Here we go. You are looking live. Welcome to the Trading Desk with Rob and Maria, except no Maria today. She said she might try and get down here a little bit later, but I'm afraid she may not make it. We are going to talk a little bit about trading today. We're going to do some live Crazy Ivans if we get a chance. We'll go over most importantly, what our 20 trades are for the $1 million account and what the 7 or 8 trades are for the $30,000 account. We just got finished doing them, and I see in the chat room, I see Mario there and Robert, I see Lou, and I see Pacer there. And someone asked, can we post the 20 trades for the $1 million account filtered by P&L in addition to time? And we will try and do that. There's to France as well. Let's take a quick look at the markets to see what's going on here. We've not quite opened yet, so I expect us to open up any second now. What is it? The official time is we got 4 minutes to go, and we'll see where that takes us. So that should be fun. Before we do, let's take a quick look at where we are with these. Let's just take a look at where we are with. I want to. Oh, look at that! Boom, boom. Here we are. So, just so a quick recap, while we get a chance to do so, is we have had a pretty good run, as you can see. I don't know if I can get this mouse to work here. Hopefully, we're going to get a nice, clean stream today. Let's take a look-see at where we are with this particular account. We are up 390. There's my little. We're up 392,000 since October 1st. That's 92 days of trading. And most importantly, we've sold $3.7 million worth of premium and captured a little over 10%, doing 13,482 trades. What I really like is the trend that we've had here, a nice steady uptrend. And we like to see that we're doing exponential moving averages and multiple entry iron condors. If you're not familiar with the channel, check out our YouTube. We got a bunch of information there. The next one I want to show you is the $30,000 account. And again, you know, as you're going to see, these charts are pretty similar. You know, when you look at them, they're pretty similar. The only difference is the amount of money. This $30,000 account has done great with $13,000. I think actually some of you doing the math out there might be able to figure that out. There's, by the way, here are the trades for the month. It's coming up a little early, but I'm going to show you those in just a second. Otherwise, I don't want to lose all of my guests here. All right, so we got 2.5 minutes to go, so we got time. Let me just show you. Here, why hold off, right? Here are the trades. The green ones are for the $30,000 account, and the non-green ones are for the $1 million account. You're going to do the green ones and the blue ones for that $1 million account. The green ones are the highest P&L that we've had for, not P&L, but we look at Sorrentino, we look at MAR, we have some internal metrics. We like the ones in green the best. So we're going to do those in the $30,000 account. And that might account for why the $30,000 account as a return on capital is actually doing a little bit better than the other one. We've got a minute and a half until the open. So here they are. You can pause this. You can capture, you can go back, take a look at it. Here are the numbers. Notice there's a whole bunch of them at 12:07. And there's a bunch of them at 12 o'clock, but man, there's a lot of clustering. I understand. That's just the way it is this particular week. Trust the back test, as they say. I mean, look at the results speak for themselves. Let's take a look-see over at the Tasty Trade platform. I want to see where this thing is going to open. This is my particular account. Notice I got these crazy Ivans on here, and you'll see that we'll talk about those in just a second. Let's just take a look at this and see what happens as we get to the open here. All right, so let's see where we are. Here we go. We closed at 1 o'clock today, so that's why this is kind of an odd thing. Boop, boop. Let's take this over here. Let's make this a little bit bigger. I think we're going to close to the downside, but you know what? I can never predict what the damn thing's going to do. That's the reality of it. You know, it'd be nice if I had a little bit more time to set this up. I would have done it better. Look at that. There's my pretty face. All right. And we are open in 19 seconds. We're looking for this number right here. Give this just a little bit more. This number right here is where is the opening number. So right now it's saying down 90. Well, that's Bitcoin. Right up. The one that's highlighted is the number 56. All right, that's where we close. Here we go. And we're closed. And of course, we're opening huge to the upside. I said to the downside. And we're going up. Not huge, but it's down. It says it's down 37 points. I don't know whether that must be from Friday's close, is how they're calculating it, I'm guessing. But at any rate, so we're at 25,756. We'll see where this settles up. It's not, it's not enough on the upside to make me get profits on my account. And let's just see where this goes here. Nah, it's not going to do anything. It's not going to do anything. All right, let's see what the questions are. Any thoughts on using the distance from the underlying as exit criteria instead of a stop loss to avoid stopping out on volume spikes? No, I've looked at that, Jeb, and we've looked at lots of different ways for lots of different types of stop losses, and it just doesn't prove out. When you do the back testing, what you find out is the best way to do it is to just pick these stop losses that we have. There's a reason when you look at the numbers, right? When you just look at the numbers, you say, well, geez, the proof is in the pudding, right? The proof is in this darn pudding. So yeah, I understand. Now, by the way, to read these things, I wasn't very clear. To read these things, what you want to do is, I guess it's on a roll. $1.45 multiple entry on Condor, 95% stop loss. That's the way you read these. Obviously, that's the entry time. The green one is for the smaller account. The non-green one, all of them are for the $1 million account. That'll give you kind of an idea. Again, you can go back and take a look at that if you freeze it if you have any problems with it. What's the average loss you take on one lot, Crazy Ivan, when you have to buy the put? Okay, so everybody likes talking about these Crazy Ivans. So what happens is, let's just say that I've got one of these. And, well, first of all, I don't take a loss. I can't remember the last time I took a loss on a Crazy Ivan. I have to hang in there a long time, but I don't remember the last time I took a loss. It was in October that I had to roll one, I think. And I rolled it to January, but I ended up closing it out in November. So let's just go through what these are. Let's go, and we're going to take a look at the Crazy Ivans. I always go out 45 to 60 days out. So this is 43 days. This is 53. So I'd go here. I always go to 12 Delta right here. I like to be on the 750s, the 500s, or the 250s, or the 1000s. So I don't like to be on the hundreds. So I would go to this 12 Delta. And like Maria mentioned yesterday, what I would do is I would say, well, instead of selling it for 184, I'll sell it for 208. So I would put in an order for 208 rather than 175. And if I get filled, great. Now, I've done a whole boatload of these in last 14 days. So here's a bunch that I've done in the last 14 days by buying to close. You can see what happens is when the market goes up, I buy them to close. When the market goes down, I sell to open. That's why I love big down days. They're the most fun because you have to fill up with these things. And then when the market goes back up, I buy to close them. And so I'm buying them like in the 225s, 215, 230s. And I'm selling them for 250, 237, 225. And I'm buying them back for 141, 139. I like to close them out at 25% profit. Okay. So now, the more important question is, what do you do when it goes down, right? Anybody can manage the winners. That's easy cheesy. What do you do on the losers? And what I do is, the first thing I'll do is I would just buy one here to block. Let's take a look at one that I already have. It's more interesting when you look at one that I already have. So I've got 8 of them here. Let's just say I'm going to close one of these things. Okay, or basically I'm going to roll it. So I would go down here, and if I got one, so let's get out of this. So I've got one, let's say here, and this is at 23,000, and we're at 25,000 more or less right now. So if this came down within 250 points of me, so let's say it came down to 23,250, I would just go ahead and do this. I would just buy one right underneath it. Now that's going to stop the bleeding. It's going to cost me like 600, 500, 600 points. So what I sell for 250, let's make the math easy and say I sold it for 650. So it cost me 400 points. I'm 400 points negative. Right. So, and maybe the market doesn't come back and I have to ride that all the way out till the end. And if I do, then I'll just take the loss. But that's normally not what happens. Normally the market comes back. And when the market comes back, and it comes back, say, in 14 days or 7 days or whatever, especially with Trump, it comes back really quick. You know, if you ever read The Art of the Deal, all his philosophy is if you want 10, you ask for 100, and then you can settle for 20, and you get better than what you wanted. I mean, that's the whole theory. So he says, you know, we're going to attack Greenland, we're going to do all these crazy things, and then pulls back. And we still get better than where we were, but the idea is, he says, these, you know, insanely wild things to the side, you know, so out of proportion, and the market takes him seriously. And so once you've seen it enough times, you say, well, wait a second, when the market goes way down on these proclamations, it doesn't matter if you're pro-Trump or anti-Trump, doesn't make any difference, but when you see the market move gigantically, it's probably overreacting. It has been, you know, multiple times. April, when they did tariffs, it's all the time. Going to attack China, going to take over Greenland, you know, going to tariff everybody for everything. It happens, right? So when that happens, then I just go ahead and come back, and what I'll do is I'll just sell these things, and then I'll buy them back. So let's say it cost me $600 to buy it, or $650, and then a couple days later I can buy it back for, say, $400 or $300. So now my cost was only $200 or $300 on it. Let's say it's $200. And if I'm closing these at, say they're at $250, and I'm closing them for 25% profit, what is that, about 60? So it's going to take me 3 or 4 of them to get even Steven on the cost. The other thing you can do is pretty fun. If you want, is you can just roll them down and out. So you could take this position, and let's just take on the same thing and say that we're just going to roll the expirations out to 120 days. And what you then do is you watch these. I want to make sure you can see this clearly. So there we go. So what I'm going to do is I'm going to go down here, and I'm going to say, okay, I want this credit to be 0. So I'm going to take this amount that they want, and I'm going to push, boop, 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 boop. I'm going to keep going up. Notice that the credit now is down to like 133. I want to keep taking this credit down to 0. And there's the first debit. So I want first credit. Okay. So you can see here, what did I do? I went from you know what? I am going to take off my camera, so you can see it a little better. Okay. So what I'm going to do here is I'm going to get a $36 credit. And you can see from here, I went from 22.5 down to 2,000. So I got 2,500 more points that I got of protection. That's called going down and out, down and out. And that's exactly what we went. We went down and we went out. So we went down, right? And we went out to whatever it is, June 18th. And we went down from 22.5 down to 20,000. And that's called going down and out. And then what you do is you got to be sure that you're looking over at your order chains, right? This is one of the things that I like about Tasty. One of the many things I like about them is that they have these order chains, which makes it really easy to calculate. And you go over here to the order chain, and this is going to show you exactly where you are in every single position. And you'll be able to see all the different times you've rolled it and all the different things you've done with it. So that's what we do here. Let's take a look at the chat room. What's the average loss you take on a one lot CI when you have to buy the put? Like I say, I don't take a loss. I cannot remember the last time I take a loss. You just got to keep rolling them. You know, roll them down and out. Or if you're going to take a loss, I suppose if you just bought the put and if it stayed bad, you might have to take a loss. But I can't remember the last time I did that. If I did, it would be, you know, 200-300 points is what it. So what's that? It's $5 for every quarter point, $20 a point. So you can do the math on that. On Mac trades you shared for the week, can you remind me, is the premium the amount you want to collect on the short option only? I am glad you asked that, Pacer. That's a great question. When you take a look at these numbers right here, what we're looking for, let's say on this one, $1.45, okay? That's a $1.45 on the short and $1.45 on the short put and $1.45 on the short call. All right. So that's what you're looking for. You're not looking for anything. I wonder why I can't get it. There we go. Look at my smiling face. So remember, you're going to go $1.45 on the put there, and then $1.45 on the short leg on the call. And the 95% stop loss is also just on the short. It's not on the put credit spread or the call credit spread. So a put credit spread is a short and a long. A call credit spread is a short and a long. The $1.45 and the 95% stop loss and the $1.45 premium target, they apply only to the short leg, okay? That's the way this works. We use Options Omega. We trade at Schwab and at Tasty Trade. The reason we do that is it's really easy to set these robots up. It's really inexpensive. And again, you know, the one thing people say, well, why do you do this? Blah, 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 blah. And I say scoreboard. I mean, you know, just look at the numbers. Remember something else that drives me crazy? People tell me, oh, I get a 5 cent cheaper commission at who knows where, someplace, right? Okay, that's not material. The commission is really just 5 cents per trade, 10 cents per trade. That's chump change, right? What's more important is when you look at slippage. Remember, slippage, when you get a nickel of slippage, it's times 100 shares, so it's $5. 5 cents of slippage is $5. So you want to be really, really careful on this. You want to make sure that the slippage is low. And the slippage is the lowest at Schwab and Tasty Trade. Why? Because they have better technology. They got better placement of their servers. They got better execution. And that's what this comes down to. Once you figure out these numbers, right? Once you figure out what you're going to put the trades on, then it's a matter of execution. Minimizing your costs and getting the execution down. And that's where we think that Options Omega, Tasty Trade, and Schwab are the best. All right. Next question. Maria gets her alerts within 500 points. Where does she buy her puts when that happens? That's right, Malachi. You are absolutely correct. So, in fairness to Maria, let's take a look at what she would do. If Maria was going to trade one of these today, what would Maria do? I don't know what the initial. What would Maria do? First of all, she would not go out. Boom. All right, she would not go out 45 to 60 days like I would way out here. No, she's not going to do that. She's going to go somewhere around 12 to 25 days. Let's give Maria the benefit of the doubt and say 16 days. And then she is going to be 16 days are not very much. Let's find something where there's something there to trade. She's not going to like 31 days. Maybe, let's try this, 11 days. Here we go. Okay, so she's going to do something like 18 delta. And so this is what she's going to trade. Now she's going to do when it gets within 500 points. So this one's at 23,550 and this thing's at 24,780. So notice also that futures are not like Microsoft and Nvidia and stuff. Even though it's still the NQs, they have way different prices. There's 8 futures per year and they do have different prices. If you want to know what they are on Tasty, just take a look here. This one's up here. This one up here is trading, the current one that we're in is trading at 24,777. The one that starts on March 20th is trading at 24,984. So that's a difference of 200 points. So if you're going to do the same strike price, you're going to get 200 points to the good on your naked puts if you're going to go out to the March 20th one. But I know Maria won't like to go out 30 days. And then if it gets within 500 points, she's going to roll it down and out. She doesn't buy the hedges that often. She just rolls them down and out. Buy in front of it, sell, put at 250, then 250 points higher, but buy roughly 5 times. But underlying can close underneath for a zero loss, improves expected value. Okay. You're going to get a chance donating Crazy Ivans in the next few weeks, Rob. A lot of involuntary activations from my job for pilots, possible Iran attack. Okay. I have to tell you, I don't listen to the news. I don't watch the charts. I don't listen to the analysts. I don't care what Trump says. I do care what Powell says because I think Powell's got an axe to grind. But I really don't care about FMOC. And once Powell's gone, I won't care about FMOC. But Powell, what he does is he's obligated to make us the report on what the committee did. And then he gets to take questions. And when he takes questions, he can answer them his own way. And what he's fond of doing, since he knows that Trump's going to mess with him, is that he says, well, we might raise rates, even though they have no intention of raising rates, just because he loves to drive the market up and down, in my opinion. That's what I see happening. So when a single lot CI goes against you, how much P&L pain do you take? Well, it does lower you're going to lower your P&L, but that's just for the day. You have to understand when you're selling puts and calls, and especially when you're selling naked puts, and you're doing it in the Crazy Ivan, It's not like 0DTEs where at the end of the day, that's it. You don't have any chance to recover. That's not the way it is with Crazy Ivans, okay? With Crazy Ivans, if the market would go against me huge in any of these accounts, I would just roll them down and out, or I'd hedge them, right? Mostly roll them. If I roll them, even though my P&L goes down, understand that all that money goes over into my extrinsic. So I always keep up at the top a list of what is my extrinsic. Here's my extrinsic right here. This is my savings account. I'm going to get all this money. All this money is going to come into this $64,000. I got $100,000 worth of extrinsic. So today, when it says the P&L is up, most of it, some of it's the theta, but most of it is going to be going from extrinsic over to P&L for the day. Okay, that's what's happening. If I lose, it goes from P&L to the day over to extrinsic. But as we get closer and closer to the expiration, I'm out of the money, all this extrinsic comes back to me. So the game is to keep moving the goalposts on these things. So you keep moving them down and out, down and out, down and out, down and out, till eventually the market can't catch up with you, and you're going to finish out of the money, and you're going to get to keep all the money. And all that money is going to move from extrinsic over into your P&L. That's the game. I've been doing it for years. There are very few times where I've actually had to close for a loss. Now, sometimes you can't roll it down and out because the markets get crazy. There were some instances when that's happened, and I've just taken the loss. It is what it is. You're not going to win every single trade in this game. I've got a video coming out about my dad was president of the United States Olympic Committee, and he's head of all water sports for the world. He was head of he represented the United States to the International Olympic Committee. And he appointed George Steinbrenner to the USOC, U.S. Olympic Committee, because my dad wanted to put professionals in the Olympics because we were getting beat by the Soviets who had professionals on their Olympic team. And I remember we went to, I don't know if it was opening day or not, but we went to Steinbrenner's box at the Yankee Stadium. And I said, "Oh, look, so-and-so is coming out the bat. I bet you want him to get a hit." And I'll never forget what happened. Steinbrenner pulled me aside, and I'll never forget what he said. This is great advice for traders. He said, "Son," he called me son. He said, "Son, I don't care if that guy gets a hit. I don't care if we score a run this inning. I don't care if we win this game. All right? I don't care if the Red Sox beat us every single game this year. I don't care if we win the pennant or not. The only thing I'm interested in is winning the World Series. You gotta understand what the goal is, okay? And the goal here, when I look at my account, the goal is not to win a particular trade. The goal is not to win a particular day. The goal is to win over time. That's what my portfolio is. That's the World Series right here. This is the World Series, okay? This is what we want. We are looking for, I'm not caring about, it's down, it's up, it's down, January was bad, it's terrible, the sky is falling. No, that's not what I'm interested in. I am interested in the portfolio. When someone asks you, how'd you do today? How'd you do this week? You know what the best answer is? I have no idea, and I don't care, right? I don't care. The reason you don't care is because that's not the game we're playing. As Maria is fond of saying, we're not in this for one time. We're in this for a long time. And that's what you want to start doing. Look at the long time. That's where we want to win. All right, enough pontificating by me. All right, the Qs are down 30. It's got to be down more than that for me to do something. So let's see. Is there an unlimited OTOs at Schwab? Yes. Okay. So when you're trading at Tasty Trade, they have a limit. They used to have a limit of 4. One triggers the other orders. And now they have it for 15 if you have portfolio margin. I write to them every day and talk to them about it all the time. And Schwab does not, right? So if I was a new trader and I was going to invest, say, over 100,000, maybe over 200,000, I would probably think about going to Schwab first if I was going to do these trades, because you are going to get more OTOs. Having said that, I like Tasty Trade a little bit better myself. And the reason I trade my bigger accounts over at Tasty Trade to this day is I think they have better execution. They certainly have better tech support than anybody else on the planet. And the other thing that I really like about them is, although they only have 15 OTOs, those OTOs, they're no good in the afternoon. You're not going to get any really type of money. Most of your longs are worthless. They're that far out. It's the ones that stopped out earlier are worth the money. So I put my OTOs on the earlier ones. So it doesn't really affect me that much. Is your capture rate higher for CI than for 0DTE? Yeah, my capture rate is 25%. That's what I close them at. And in fact, I gotten greedy. Those of you that have watched this channel know that I've gotten greedy sometimes. Sometimes this gets up and I forget to look at it, or I've been doing something else during the day. Let's see. And I forget to look at this number. When this number hits 25%, I'm supposed to close it. A lot of times I only do it if it's at 345. There was a couple years, what I did is I put these on at 1030 every single freaking day. I just didn't care. I just put one on every day. When it got to 25%, boom, it's like clockwork. I put it on. I set a stop loss. I set a profit target at 25%. It would just automatically close. And I just put them on every single day at 1030. That worked out great. That worked out great. I started backtesting that. I found I could get a little bit more money if I waited till 345. I think they got the average up to about 32%. So then I started waiting until 345. Then I started doing the 0DTEs, and I started doing the videos, and I got to prepare for them, and I keep forgetting to take them off, and then they go higher and higher. So especially when we get a run. And so then I forget to take them off, and I'd see, like, say this one was at 42% profit, and now it's at 25% loss. And I get stubborn, and I say, well, I'm not going to take it off till I get to 42%. So, but my capture rate is much higher than 0DTEs. But remember, and what makes 0DTEs so great is the compounding, right? You get to use that buying power over and over and over and over and over again. So if you're getting 10% a day, right? That's a lot. That's better than 25% every 2 weeks. I don't know if I mentioned or not, but these take about 14 days. The average I get on these is 14 days. So what am I at? 13, 18, 17, and 4 days. That's about right. And I got eight of these, so it looks like I probably put these on all at the same time, or maybe in 2 days. But in extrinsic, I got about $106,000, and I'll get 25% of it. Excuse me, I'll get 25% of it. So, because that's what I'm going to close out. It's too risky to run them all the way to the end because the market could turn, and you want to do that, and you want to keep rolling them over and over and over again. So, you stated your annual return for CI was around 50-75. Is that buying power or account value? Always on buying power. I always talk about my rate of return on buying power. And the reason I do that, and probably a lot of you have heard me say the same thing over and over again, is if you have 10 million in your account and I have 1 million in my account, and we both are trading $1 million and we make 100 grand, my risk tolerance is much different than yours. And if we make 100 grand and I've got $1 million, then I made 10%. But if you have 10 million in your account, but you only traded $1 million and we made 100,000, that's only 1% profit. So someone would say, well, how much did you make? And you'd say, well, I made 1% on my account. No, you made 10% on the buying power that you used. And the way then you can start comparing and contrasting trades. You say, well, gee, on strangles, I'm making 4%. On straddles, I'm making 6%. On treasuries, I'm making 4%. But gosh, on SPX 0DTEs, I'm making right now about 104%, right? And on Crazy Ivans, I'm making 25%, but I'm making it every 14 days. You have to take off the losses. It's around 50. I think I was at 52%, 54% last year on Crazy Ivans. It's great. I didn't put them on all the time. One problem that I have with these, and one thing you got to be a little bit cautious about, is if you're super conservative and you're waiting for this number to get to a big number, you get a run of green days, you end up never putting any Crazy Ivans on. And so that's when we were having a run to the upside and I was missing out on it. So that's why I just started putting them on every day at 10:30. So win, lose, or draw, it'll average out. And, one of the things you have to remember about the market is you got a lot of advantages going for naked puts. Number one, the government, you think about it, if you're a politician, what are you going to do? You're just going to spend money. And they all say they're going to try and cut the deficit. Why would they? Right? Just print money and give your constituents more money, and you'll get reelected. That's the game. So they're going to print more money, and that'll drive inflation. And then you got the 2,500 best companies are in the NASDAQ in the United States or in the world. And those 2,500 companies, most of their executives are going to be the best executives in the world. And those executives are compensated by stock price, right? So what's their incentive? It's to drive the stock price up. And then you got a lot of the workers that are on employee stock option plans, ESOPs, and that's all. They want to get the stock price up. So everything is to the upside. You got inflation, you got executives, they're the best ones running the companies, trying to make profits. Even all the employees are in stock option plans. Everybody wants up, 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 up. So you always are going to have, you can have a down market. I get it. But the market is set up to go to the upside. That's where it's set up. And people they overstate their fear. Remember, when we're selling a put, all we're doing is selling insurance. That's why Maria likes down days so much, and I do too, is because the best time to sell hurricane insurance is when the hurricane is just offshore and people are scared to death, right? And so when it's all green, they're all sitting back, fat, dumb, and happy, and they're not interested. I don't need the puts. It's nothing but winners. $500 down date, man, they all come in. They double, they triple what they were paying. And that's why we call it Crazy Ivan, because they say, if you are crazy enough to give me that much money, I'll take it. That's what that's all about. All right, so any other questions? Did I miss any questions? And let's see, any more questions? Boom. If not, then I think we're going to call it a day. Let me go back and give you these one more time. I want to be sure that everybody's got a fair chance at them here. Here they are. I will post these in our Discord as well. If you're not a member of our Discord, please join us. We sure love it. This keeps going off. Maria hates that picture. I think it's funny. Hey, by the way, our new studio, huh? Pretty cool. Maria's got some new stuff coming. But I just created this today. We've been having some problems. By the way, how is the sound? I haven't had a chance to watch. We decided just to stream in 1080p rather than 4K. Hopefully the sound is good. Excuse me. How do you suggest a hedge on the NQ? Dean, the way I suggest that is that you just take it one spot below it, right? So if I've got this hedge on, where we go. So if I sell this Q and it goes bad, I sell it naked, right? No hedge at all. And then what I'll do is if it really heads to the downside, I'll just go ahead and buy that there, or I'll roll it down and out. That's the hedge that I do. Any other questions tonight? Any other questions? Somebody deleted a question. That's not fair. I didn't get a chance to read it. You see some of these funny pictures? I think some of these are hilarious. Where's the ones? Hey, look at this one. Oh, there we finally lost. We finally lost our video. All right, thank you guys. Video just went out, so we're going to call it a day. Thank you very much. I hope you have a great trading day. All right. Doggone cues are not cooperating. And stream in 3, 2, 1. Sound was good except for the dog. Oh, no. Yeah, the camera cut out at the last minute. That was surprising, and I